Mitul, great to see you as ever. Let's talk about Operation Twist and why it's been dollar positive.
Well, I think ahead of the decision by the Fed yesterday, there was at least a residual expectation that the Fed might announce QE3. It wasn't necessarily priced in, but there was caution for the dollar. And the fact that they didn't announce any more quantitative easing and simply just tinkered with the balance sheet rather than extended the balance sheet was good news for the dollar. After all, the last couple of years have seen the dollar take a massive beating because of the expansion of the Fed's balance sheet. The fact that the Fed isn't doing that anymore is generally a positive factor for the US dollar.
Well, it was almost like they were waiting for them, for any statement on QE3, but sort of also, then suddenly they're taking on board, well, the crisis in Europe as well.
Well, absolutely. I mean, I think what's happening here is the dollar is benefiting from two factors. One, that there isn't QE3, but also risk aversion. In an environment where the euro looks even uglier than the US dollar at the moment, the dollar will win out. And I think that's exactly what's happening now. But it's not just against the euro. The dollar is registering broad-based gains just
Except
because of
the yen, really. I mean, that's the one which is holding up.
Absolutely, and I think the yen is a different story. It is even more of a safe haven than the dollar. Arguably, the dollar shouldn't necessarily be a safe haven, but the yen is continuing to hold that safe haven role, even more so now that the SMB have put this line in the sand for Euro-Swiss. But also, I think one of the things that we're looking at is the yield differential with the US. The fact that US bond yields have narrowed their differential with Japanese yields has pushed dollar yen even lower. So the reality is that the downward pressure on dollar yen is continuing and will continue.
What is your target there?
Well, by the end of the year, we've actually reduced our forecast quite sharply in the next year or so. In fact, now we're looking at 80 for dollar yen, so only a very gradual move higher in dollar yen in the coming months.
But let's just also just talk about the euro and, given all the problems, a downgrade for the third biggest economy in the eurozone, we've got Greece, which is albeit a step away, a hair's breadth away from defaulting here, problems elsewhere, and really $1.35, that's all we've gone down to, given all this information.
It is very impressive. I think the resilience of the euro, although we've had some sharp weakness maybe in the last few weeks, compared to considering what's been going on, as you say, the negative factors building up in euro, the fact that markets are effectively pricing in a default in Greece, for instance, the euro does hold up well. I think part of that, I would argue, is central bank buying. I still think we see central bank, especially Asian central bank interest in the euro and European assets. But the question is, how long will it continue, given that the bad news keeps on escalating?
Let's also just talk a little bit about sterling here. I think it's the third or fourth most traded currency in the world, isn't it? It's had quite a beating in the last few days. What's that been all about?
Well, I think that the reality is the sterling, that markets are increasingly pricing in QE in the UK. So rather than QE3, it would be QE2. But as we saw in the Bank of England minutes this week, there is a gradual shift with MPC members moving towards potential QE. And I think that is acting as a drag on sterling. So I think sterling will continue to underperform the US dollar, but probably still make ground against a weaker euro.
Okay, but we've got a November meeting for the Fed. Are we going to expect anything more on this? Do you think, that the whole notion of another round of quantitative easing is out the window?
I don't think it's out the window. I think a lot will depend on economic data in the coming few months. At the moment, the Fed has a very high hurdle for more QE. But of course, if things deteriorate, if we start really looking at a very high probability of a renewed recession in the US, then QE3 will be on the cards.
And a Greek default. I mean, we've had Angela Merkel talk about not wanting a disorderly default, obviously leaving the option open for an orderly default. An orderly default would do what to the euro? I guess it would be the size of the haircut.
I think that's right. I mean, orderly would mean that the euro probably would not be affected too much. You might see a knock-on short-term weakness, but actually it might be good news for the euro. Now we've actually got it out of the way. A disorderly default would be much more negative. It would create panic and certainly have a massive contagion across European markets. But I think it really does depend now on...
But even if you have an orderly one, doesn't it then people, the bondholders, turn their sights onto some of the other economies?
They might do, but it really is depending on the way it is handled. If, of course, Greek default, which is by no means certain, but the reality is that if it is orderly, then markets might just say, well, hang on, this has been handled quite correctly. Spain and Italy may be able to escape this. But as you say, yes, of course, there is that risk that they turn their attention to other countries in Europe and the euro comes under pressure.